everybody. My name's August Widmer. I'm here with Credix, and I want to tell you what I think is the most compelling use of decentralized technology in the world today. And what we're doing over here at Credix is we have identified a $5 trillion credit gap in emerging markets. Over 20% of that is concentrated across Latin American economies. And we're out to solve that mission. And we're doing it specifically by building out a decentralized lending protocol built on Solana and powered by Circle's USDC, where we're bringing institutional capital on-chain and delivering that to fintech, non-bank lenders in Latin American economies in the form of structured debt vehicles. And the way that these facilities are built out is that we maintain a full alignment of incentives between the actual fintech lender receiving the capital and an additional due diligence provider, and then a senior liquidity pool. Now, if we take a quick look here, I'm going to pull up what a typical Credix marketplace is and explain really the process of how we are addressing this need. So you can think of each one of these as an individual credit line issued to a fintech non-bank lender. These lenders are then using that capital, again powered by Circle's USDC, they're using that capital to go out and fund small businesses, auto loans, motorcycles in their local economies where capital is otherwise very scarce and hard to come by. It's a really, really powerful mission, and it all truthfully begins with our boots on the ground office based in Sao Paulo, Brazil, where we have a full business development, credit risks and structuring, and legal team that are out meeting with these non-bank lenders, getting to know them, leading full due diligence, and really diving in and doing a lot more of the off-chain lending that you'd see typical of a traditional finance credit firm. And then, powered by our full tech stack, we bring those on-chain in the form of these tranched vehicles. Now, we have our borrower here withdrawing. USDC is powering the whole transaction. We have our investors putting in either junior capital or senior capital via the liquidity pool. Backing each one of these loans, each one of these obligations, is an excess collateral spread built in at the SPV level in the local economy over collateral pledged by the fintech lender themselves. We're averaging about 120% over collateral on each individual facility issued. So what does that mean? That means additional downside protection for the investors, which is a compelling narrative. And when you look at our more passive investment vehicle, which is the senior liquidity pool, which invests across the senior portion of all deals live in a marketplace, that today is yielding in the mid-13, the trailing 13.4% 90-day APY, all paid purely in USDC, no token emissions whatsoever. And the truth is, a lot of people ask me, could you do this without blockchain technology? And my answer is we've tried. And that just really hasn't been there. This has been a really, really closed market, extremely opaque. You can't crack into it unless you're a BlackRock or a huge institutional fund. So let's think about the smaller family office investor, the high net worth individual who wants exposure to these asset classes. How do they do it? They come in, invest in our platform, all using USDC, and get their USDC back. So they don't have to deal with the crypto token emissions, fluctuations in there. It's all powered right there for them. And at the cusp of it is that core thesis of unlocking capital to emerging markets and really changing lives on the ground. It's really exciting stuff. We actually, we just announced a facility for $1.5 million to fund motorcycle loans in Africa. And these are bringing people from rural communities into the city center for work, to get to the schools, to get to hospitals. It's connecting local economies on the ground. And that's the kind of stuff that gets me really excited. And really, really excited to be sharing this with you all. So what I'm going to do here is break into one specific deal a little bit, show what the underlying metrics might look like, how we're breaking up that tranching mechanism, and exactly what you can expect from a disclosure standpoint, even before you're an investor. So I'm doing this as a non-investor, just going to that credence of transparency. So you scroll over here, this is on our invest page. If I click here, you see we have over $31 million in credit outstanding. We've deployed really over 33, but we've had repayments. What does that mean to me? That means over $30 million of capital deployed to change lives. And our 90-day APY, again, right there, 13.4%. We've returned about 2.5 million in interest payments, 0 defaults on the platform to date. And when we scroll down, we can start seeing exactly what the underlying deals look like. So you'll see here, we have a lot of revenue-based finance, asset-backed car loans, invoice advances, and it's a diversified basket. It's in Latin America, but it's a diversified basket of a lot of small business loans. So when we click on here, the Divvy Bank deal, this is a $5.5 million facility going out to fund revenue-based financing. These are the disclosures that you can expect to see in our platform, which are new really to the industry. You can go here and you could track the borrower's wallet address. Again, moving that USDC through the system allows us to do that. You really couldn't track that same way in terms of a fiat vehicle, but we can now with this new, really, really exciting technology, and we're expanding the availability of capital to these markets. You can see the type of loan repayment here. We have a custom payment facility built out. Our dev team is really, really adept at building out custom and repayment schedules, loading them in. They found great flexibility on the networks that they build on, and so they can build this out really in a tailored, bespoke manner to meet the needs of our customers. That's customers both on the investing side and on the borrower fintech side. Scroll down a little bit, and this is where it gets pretty exciting here. We start looking at the tranching breakout. So you can see the junior most tranche is going to get paid a little bit higher. You move into the senior tranche, it's going to be paid a little bit lower because you're taking on less risk. You get paid for your risk appetite. Again, all powered by USDC, and I harp on that because of when you see the token emissions and the token rewards and the gamification of assets across the blockchain, we aren't that platform. We're really using what we see as the most trusted on-chain infrastructure to power this vehicle and deliver that real value. And when I move back here to our fintech market, as we call it, this is the collection of all deals. So you can look at the number of active deals, 19. You can scroll through. You can look at each one. You can understand exactly the type of assets that we're approaching, how we're approaching them. And for me, it again all comes back down to that boots on the ground, that local knowledge, that credit structuring, that credit enhancement, those legal agreements, and what we're doing to protect investor capital so that we can be a long-term engine for growth to deliver value into our core Latin American markets. So when we look at the Credix marketplace, we see really what have traditionally been two disparate, completely separated parts of the economy. We have the investors in traditional markets, and we have the borrowers in emerging markets. What we at Credix with Circle in our partnership are able to do is connect those two communities and power value to both of them in a new, exciting, really cutting-edge way. Thank you all very much for checking this out. Go to credix.finance to learn more. You can find me, I'm August at credix.finance, and always happy to chat more about this. And thank you very much for the Circle team for everything they do behind the scenes, the great work, and building out the infrastructure to make this possible.